You know, every business has that one thing, that key to its success. But what if that key isn't what you think it is? What if it's not a product or some fancy patent? What if it's someone? Someone you've maybe overlooked.
Okay, so I want you to think about your own company right now. Seriously, what's the one thing that if it just, poof, vanished tomorrow, would cause the most chaos? What's the real engine that keeps the lights on? Well, for most businesses out there, the single most valuable, the most irreplaceable asset is the one that walks right out the door every single night. And that right there, that brings us to this huge and, honestly, super common mistake that businesses make when they're thinking about risk. They leave their most important asset totally and completely uninsured. I mean, just think about how ironic that is for a second. We insure our computers, right? We insure our buildings against a fire, but we totally forget to protect the person whose brain, whose expertise makes all that stuff profitable in the first place. It's a massive blind spot. And let me tell you, the impact, it's immediate and it is severe. When that key person is suddenly gone, it's not just about an empty desk. No way. Profits take a nosedive, projects grind to a halt, those really important client relationships start to fall apart, and honestly, the morale of the whole team just tanks. It's a total domino effect. Okay, so you're probably wondering, who exactly is a key person? Well, the answer might be a lot broader than you think.
Now, this has nothing to do with a fancy title or who gets the corner office. A key person is all about their unique contribution. It's about the real, direct impact their absence would have on the bottom line. Simple as that. They are absolutely essential to the value your company creates. So here's the official definition, but really, the most important part is this super simple test. Just ask yourself, if this person couldn't work for a long time because of an illness or an injury, would the company take a major financial hit? If the answer is yes, boom, you just found a key person. And these people come in all shapes and sizes. We're talking about the well-known doctor who patients flock to, or the chef whose menu has a line around the block. How about the IT wizard who basically keeps the whole digital world from collapsing? It could be your top salesperson, that brilliant architect, or even the hairstylist who's always ahead of the curve. It's all about that irreplaceable value they bring.
All right, so we've nailed down the problem and we know who we're talking about. Now, let's get to the good part, the solution, the financial safety net that's built for exactly this kind of situation. It's called Key Person Disability Insurance. And listen, here is the absolute most important thing to understand about it. This policy protects the business. The money goes directly to the company, not the employee, to help it survive the crisis. And the business can use that cash, which, heads up, is often tax-free, in really smart, practical ways. You can use it to cover the crazy fees for a headhunter to find a replacement. You can use it to pay overtime to your other staff who are picking up the slack. You could even use it to fly in a new manager to meet with clients and keep them happy. It's all about having the cash on hand to navigate the storm. So when it's time to actually get that money, the business usually has two main choices, and each one serves a very different strategic purpose. Really, it boils down to this. Do you need a steady stream of cash, or do you need a big chunk of capital all at once? The monthly benefit is like a temporary revenue stream for the business, right? It gives you consistent cash for about 1 to 2 years to handle your day-to-day costs. The lump sum, though, that's a big, one-time injection of cash. It's for when a long-term disability could trigger a massive financial crisis. So, just how much money are we talking about here? Well, for those monthly benefits, a policy can typically replace up to 150% of that key person's income. And what about that lump sum option? Get this, the payout can be up to 3 times their annual income. I mean, that is a massive amount of capital landing in your bank account right when you need it the most. Okay, let's pull back the curtain on some of the insurance speak. I want to break down a couple of key terms so you know exactly what's going on with these policies. Fundamentally, it's a super simple 3-step process. Step 1, the disability occurs. Step 2, a waiting period kicks in. And Step 3, once that wait is over, the business starts getting paid. That waiting time has a name. It's called the elimination period. The easiest way to think about it is like a deductible, but instead of being about money, it's about time. It's the period you have to wait before benefits start. And you, the business, get to choose how long it is, anywhere from 30 days all the way up to a year. And then there's the benefit period. That's just the payout window. It's how long the business will get those monthly checks. For most of these plans, you're looking at about 12 to 24 months, which gives the company a really solid runway to get back on its feet.
Okay, let's circle all the way back to where we began, to that core idea of identifying and then protecting your most valuable asset.
Because at the end of the day, insuring your key people is so much more than just ticking a box for risk management. It's really about protecting the future of your entire company. Your resilience, your ability to innovate, your success, it's all tied directly to those critical people showing up every day.
And that leaves us with one last really important question for you to think about. I'm sure you have insurance for your office building, your computers, your inventory, but what about the actual people who make all of that stuff valuable in the first place? Your business is insured, but are your people?